Gold prices have hit the much anticipated $2,000 announced, but this was a long time coming, according to our next guest, who has been calling for this for quite some time. E.B. Tucker, you are correct once again. How did you make this happen?
Well, David, I have the power to see the future. I mean, obviously, I'm kidding, but we've been studying this for years, and the first target was 1,500. We came on the show and told you how that was going to happen, and then the next target was 1,900, which was the old high. So now, we have a new target we can talk about by the end of the year. We feel very confident with it, and this gold rally is very fun to watch because it's been building for a long time. Yeah. And you're on to something when almost all the commentary you see about the rally is wrong. So we can talk about that as well, because that's the primary thing that's got us excited right now.
We're going to talk about how you make these predictions, because I think a lot of viewers want to know your secret sauce, or whether or not you've been hiding this crystal ball in your closet that no one knows about. But first, I want to ask you how your sentiment is right now, because you did initially call for gold to hit $2,000 a little bit later in the year, and a lot of people actually had anticipated gold to climb higher later in the year. Does this sudden rise this summer worry you at all? Have we gone a little too fast, too soon?
Well, it's a perfect question, because normally I would say yes, but what I'm seeing in the daily action is that gold is rising in a very measured way, and it's not meeting much resistance. So when that's happening, you just step out of the way and let it go. That's what you do, because there's some point you'll have a correction, but you're not going to have that correction yet. And so when you see a chart moving like this, you have your position. Anyone that read the book knows exactly how this is going to happen. I mean, you've got a copy of the book there with you, yeah. and as well as everyone that's read it, that we laid out the path. Now, we told people you got two things in life that are key in the markets: how and when. So we laid out the how, and we talked about what the when would look like, but the when things are going to happen is constantly evolving, because things come along that you weren't expecting. But those factor into the model, and they accelerate things. And so our target for the end of the year is accelerated now that we crossed with a lot of horsepower. I mean, we didn't go out with a whimper when it came to taking out the old high. We went out with a bang, and that's going to continue.
E.B., your book came out 2 months ago. Correct me if I'm wrong. I think 2 months ago, right? Why gold? Why now? The war against your wealth and how to win it. I had a chance to read a few more chapters since I got a hold of it. And one part stuck out to me correctly. You wrote that crisis breeds chaos. What are we seeing right now? Are we seeing crisis, or are we seeing chaos?
Well, capitalist systems have recessions. I mean, we haven't had a proper recession since 2002. But a crisis system is different. I mean, you go from bubble to crisis to bubble to crisis. Now, as you see, you had your crisis in March this year. You had an immediate response of several $1 trillion. Now you're having another response. I mean, we talked about what to look for when you see these responses. I mean, they all have fingerprints. And once you learn how to read them, you see what's coming after the crisis. Now you have the HEALS Act. We talked about why they named these things with acronyms in the book, and explained how they work. So one thing people need to see is that this is not 2010, 2011. A lot of people that bought gold in 2010, they held on to it till now. They're selling it. I can't even tell you the number of calls I've gotten from people that feel bad that they finally sold their gold a couple of months ago because they got back to where they bought it in 2010. And I try to tell them, and we said this in the book, this has nothing to do with 2010. I mean, back then you had the very early stages of QE. It was controversial, for the Fed to be involved with a few $1 billion in the market every month. Now you have trillions of dollars. So in 2010, QE was new. Now it's over a decade old, and it's ramping up. And it's not just QE, it's a whole crisis system. So we're going to go back into a bubble, and then we'll have a crisis, and these bubbles get bigger, and the crisis gets bigger. Now, you got to be able to spot these things, or you're going to get wiped out in the crisis, and they happen fast. It's a lot faster than a real recession, which takes time to play out because that's a natural event. A crisis in a bubble is a created event.
E.B., which do you think is a stronger force on gold right now, the dollar or inflation?
Well, the dollar is the last currency to make a high in gold. So obviously we watch, the Canadian dollar, the Aussie. We watch all the major countries in the world. They all put in new highs in gold before the dollar. So the dollar is merely playing catch up. I mean, you can see it in the strength of the euro right now. So there's an adjustment period that we're in right now. The dollar is weakening relative to other currencies. You're not hearing much about it. Most people in the U.S. don't know that the dollar is valued against other currencies. I mean, it makes up about half of the dollar index is about half euro weighted. So one currency to watch is the euro to see it. But the euro is gaining value, the dollar is losing value. So if you travel internationally, you know this, but most people in the U.S. don't. In fact, only a small percentage even have a passport. So people don't notice this. Now, in the book, we talked about other times in the past where the dollar was in a period of weakening and what happened with gold. This is not new. I mean, back to Nixon, 71, there was a period where they tried to hide the devaluation of the dollar. And it's a measured devaluation. They don't want this to be reckless. But you have an adjustment period. And so we're in that right now. So that right now, the dollar value is the big deal. Inflation is a much more complicated situation because right now everything you buy is going up in price, but assets that you own are going down in value, generally speaking.
And where do you see inflation headed? Are we going to get prices rising, or are we going to get prices decreasing in the case of deflation? What do you see is more likely?
So what's really hard for people, and you got to try to hear this and not fight too much with it, but deflation is the real problem because what happens is we're swimming in too much money. So you have so much money that's been created, and all that money that's created over the last 10 years goes looking for investments. Okay, so supply and demand. When all that money goes chasing after investments, the return on those investments goes down, down, down because there's more dollars than good ideas. So right now I'm in Las Vegas. You have too many hotels. Okay, Planet Hollywood closed, Cromwell closed. I mean, a lot of these hotels are just shut down because they can't even fill the hotels that are open. So the roads are fairly empty. So we have so much capacity, okay, in the U.S. that you've had all this money chasing a good home, a good investment home. So what happens is that the returns are small. So deflation with asset values, inflation at the grocery store, price of meat up, price of eggs up. Price of copper up. So a lot of these things that we need go up in price. A lot of these things that we own are going down in price. And you'll say, oh, well, the stock market's going up, but it's not really going up on a real basis. I know this is a lot for people, but that's why we wrote the book, is because we explain these things in a way that anyone can understand them, because it's the war against your wealth and how to win it. Everybody, I mean, if you work, you have wealth. I mean, it's not billionaires that need this advice. It's thousandaires that need the advice.
All right, EB, let's get right down to it. You've accurately forecasted $2,000 for gold. What's the next level that we need to take out?
We look at gold. It crosses our target of 1,900. Let me tell you right now what we think is going to happen. We feel very confident about this. We're going to cross 2,500 by the end of the year. I know that it seems like a stretch because you're 2060 today or something, and it's happened very fast. There's probably going to be some sort of correction at some point. We don't know where. So you trade this on leverage, you're making a big mistake because the leverage, if it's too much, is going to push you out of the trade. This is a secular bull market. This is a bull market in gold that you're probably never going to see in the course of your life again. At my age, I was too young to participate in 79, 80. I was alive, but I was too young to qualify to have a futures trading account.
Understood.
Yes. So look, this is a powerful moment in our business. It's not for trading. You want to take this ride and you want to be patient on this ride, take your hands off the wheel and let it go and let it do what it's going to do. You don't need to be trying to short the pullbacks. And I see this all the time. Metallo Royalty, where I've been on the board since early days. Stock was started out $1.20. It's $12 now. Okay, we're very positive about everything that's happening. As you know, I'm a big shareholder there. I bought a lot of stock. I cannot tell you the number of people that sold that stock around $7 and thought they were geniuses, and they missed a $5 rally. And then they call me crying about it. I say, look, this is a secular trend. This is not for making 50 cents. You want the whole bread truck, not the crumbs.
EB, I have one last point to discuss before we go, and you just brought it up here, how to properly invest or trade gold. I'll tell you the story. I interviewed an analyst a couple weeks ago, and he told me the story of Robinhood seeing an influx of gold-backed ETF trading activity. Robinhood, as you know, is a trading platform mostly for younger folks, millennials like myself, and as gold prices have risen in the last 8 weeks, people on Robinhood are just rushing into the gold sector, whereas before, nobody my age really cared about this sector. And, it actually made it to that interview I did. It actually got posted on Wall Street Bets. I'm not sure if you follow, but that's a subreddit, very popular amongst millennials interested in finance. I mean, people on Wall Street Bets are talking about it. People are day trading gold like it's Bitcoin. Tell us what is being done wrong and how investors should be trading gold.
Well, that's what makes a market. I don't know that it's wrong. That's what makes a market. There's a website, Robin Track, where you can punch in any symbol. I mean, I do this for Metalla every day. We've seen our shareholder base on Robinhood grow about 25% because the stock has been on a tear. These are typically very fickle shareholders that are in, out, very quickly. Now, I don't know that it's wrong. I mean, that's what makes a market. This is a fast-paced market. You have high-frequency trading. You have speed trading. You have momentum trading. You have guys reading these Reddits and jumping into things. I don't know that it's wrong. However, I'd be willing to bet you that you can outperform. Okay, the way that I trade, everyone thinks that I must be a fast trader. I mean, I make trades almost every day, but they're not trades in and out and in and out. I'm either building a position or I'm taking a position off. And it happens over time, and I'm very slow, and I sometimes take an hour and go meditate or take a walk or do something that you would never expect someone that's in the money business to do. But you don't always make the most money by making extreme decisions so quickly in and out, in and out, in and out. My question would be, if gold goes from here to 2,500, how many of the guys that have the stock for an average holding period of 10 minutes end up catching the full run? That's the real question, David. So how do you do this? Okay, well, in the book, we say to people, look, the first thing you got to do is decide how much gold exposure you want. And we give a little formula for that. You can figure out yourself. Then how do you own it? You have physical, you have GLD type products. There's not just GLD. I mean, there's several products. I mean, the Sprott guys have a nice product. We explain all these products. You can trade all these things. They have nice liquidity. GLD is the biggest. SLV is the biggest for silver. There are others. And then you go into, how do you really make money in this thing? Well, my opinion is the royalty companies, because when you have hundreds of thousands of ounces, even millions of ounces in the ground, proven, that are coming up out of the ground by mining companies, doing all the hard work for you over the next 2, 3, 4, 5, 10 years, these are proven ounces. When gold goes up $100, you get all the value of those ounces today, and you have no increased cost. And that stock, if gold does this, that stock does this. And so you got to make sure that you're not just trading online gold ETFs to make 10 cents. Nothing wrong with that. But you got to make sure you're playing a secular bull market. This is not going to happen but once, David, in our life. It doesn't mean gold's going to go away. It doesn't mean it's going to go into a permanent bear market. Forget about it. Don't go to those conclusions. What I mean is, this move has so much horsepower that you just don't, it's like seeing a comet. You just don't see this all the time. And when you see it, it's a magical thing to watch. And you want to be positioned properly. And then you want to take your hands off and let it do what it's going to do, and use your perception to try to judge what to do next. It's what we do. I'll come back on when necessary and tell you what we're up to always. And I hope people will take a look at the book, because we lay all this stuff out. And the average person, I get messages every single day on LinkedIn from these people that read the book. I'm telling you, this book is written for people so they understand what's going on and have a chance. The war against your wealth. It's your wealth that's under attack, and it's time for people to get informed.
I look forward to the next time we speak, EB. And this book, it's available on Amazon and Kindle. Is that correct?
Also Audible. I'll read it to you. You can have it on Audible. You hear me read the whole thing to you. It's very nice. But Kindle, Amazon, Barnes & Noble, it's available everywhere. We've sold a lot of them, and it's not too late, because we lay out the whole game, and we're only in the early innings. There's a lot farther to go.
Perfect. Thanks very much for your time, EB. I appreciate it.
All right. Thank you.
Thank you for watching Kitco News. I'm David Lin. We'll have much more for you. Stay tuned.